Welcome back. We're watching closing trades right here on ED Now. Shantanu Khosla, who's MD Crompton Greaves, Consumer Electricals, joins in to talk about their numbers. Mr. Khosla, it's good to have you in the show. What has led to the revenue growth this quarter? Take us through the highlights as you understand it.
Yeah, we had a pretty good quarter. Our revenue growth was 20% and our bottom line growth was about 30%. Our core electrical consumer durable business did really well. That grew about 24%, driven by fans. In fact, our mid-premium segment of fans, where we have just introduced a wonderful new innovation called Air 360, which gives 50% more air coverage than an ordinary fan, drove that segment's growth by 31%. Our pumps business also did really well, where the volume growth was in excess of 30%, and that was driven by another great innovation, which is Crest Mini, which truly addresses the need of the more value-conscious consumer, and that's really done very, very well. Finally, our lighting segment. In our lighting segment, our core LED business, which has really been our focus, grew about 30%, and in fact, if you take out the ESL part and just focus on the trade and B2B part of the business, that grew 40%, again behind continued value, strong cost reduction, and driving distribution deeper and deeper.
Also, what have been your key margin levers? Did operating leverage benefits and the company's cost reduction efforts actually bump up your margins?
Yeah, there are a few things which have helped us on margin, especially given the relatively tough commodity environment we're in. First and foremost has been the ongoing cost reduction program, which has continues to pay dividends quarter after quarter after quarter. But the other is our strong focus on mix and our ability to continue to drive upgradation, especially in our fans business, where value growth was significantly ahead of volume growth. So mix and cost, these really were the two key leverages.
Okay. You know, it's a seasonal quarter for fans. ECD saw 15% growth. What led to this growth and what is the outlook thereof?
Well, the growth was 15%, but if you adjust it for GST accounting, the growth in ECD, the real growth was actually 24%. This was driven by really two things. One was strong new consumer meaningful innovations. Our Air 360 in fans, which really gives a superior experience, and our Mini Crest. The second key driver which has been driving the business on ECD has been our continued focus on go-to-market, improving our distributor infrastructure, bringing more technology into the selling approach, and widening our distribution reach. As we look forward, again, I don't want to quote any specific numbers, but our continued objective, which we've been talking about and which we feel is well within our reach, is to continue to grow in every segment faster than the market and thereby continuously, sustainably grow market share like we've done in this quarter.
Okay. Also want to understand what the ad spends have been like that were incurred by you in the quarter gone by, and will you continue to boost ad spends?
Yes, obviously, advertising behind our initiatives and building our brand is really a key part of our strategic approach. In the previous quarter, we spent about 24-25 crores on advertising. We plan to roughly spend on A&P somewhere in the region of 100 to 110 crores over a year.
Take us through the lighting segment growth. How come it's flat this quarter round? Can it change?
Well, again, just to clarify the numbers, if you take the excise adjustment, lighting grew just under 10%. However, you need to unpeel this a bit because part of the business which really declined in the current quarter, really we didn't do any business at all, was the specific to the EESL supply, the government supply. And if you take that out and really just look at the consumer and trade business and B2B, the lighting business grew about 15%. Within that 15%, however, it's also important that our focus business, which now contributes 78% of our lighting business, which is LED, which we truly believe is the way of the future, grew 40%. And in volume, significantly higher. It was the more conventional and traditional lighting which continues to decline, which led to a net number of 15%. But importantly, the future is really behind LED, where we continue to have market-leading growth rates.
Okay. Did heightened competition and adverse impact from small unorganized sectors in pumps and geysers impact top-line growth? When will things stabilize?
Not really. We are not seeing too much change either way in unorganized and small. And in fact, a few quarters ago, we were losing business on pumps to the smaller, unorganized, lower price players. But over the last 2 quarters, the introduction of Crest Mini has completely turned that trend around.
Okay, we'll leave it at that. Thank you so much for taking the time out and speaking with us and really highlighting what the quarter has been like and what you hope to achieve going forward as well. That's the word coming in from Crompton Greaves Power.